Sorry I didn't get a chance to jump in live yesterday or post a video. I was in the middle of a webinar that lasted all through the whole hour. So I think it was in a webinar until after 4. And by that time, it was like, do I jump in and do a video? I had another class to run. So I was teaching. And anyway, it was all my pinch point scanner. We had a master class yesterday and good stuff. So I'm doing another master class right after this at 4 p.m. Final hour today, just thoughts. End of May is tomorrow. Are we looking at sell in May, go away? Is that the old adage where everyone thinks that the market just takes a summer snooze and doesn't do anything? I tend to disagree. In fact, I wanted to kind of show here. If we go to OpenAI, I actually like to do a search. Let's go log in. Let's have some fun here, shall we? All right. So let's figure out what the actual performance is. I think since like maybe 1990, we'll go through the performance. See if I can get this up here. What is the monthly performance from October? Actually, it's more like November to May. November 1 to May 30th in the S&P from 1990 to 2024. And compare this to the monthly performance from June 1 to, let's say, October 31st in the S&P from 1990 to 2024. Let's see what old OpenAI ChatGPT gives us. Okay. So the good and the bad. November 1 through May 30th over the last 30 years. Again, I can spot check this, but through a couple of sources, you have the average return about 6.3% from November to May since 1990. Year-end factors, it's mostly, I was going to say most of the flows from like November to January. Most of your like, year-end targets and leaps and just overall flows trying to finish Q4 on a high note. But it doesn't mean that June to October is a slouch. I mean, you're still positive through the summer. And I have found that over the last several years, I mean, heck, we can just go through, let's go to the monthly time frame here. Let's go, let me get a blank chart, blank workspace. Let's go blank workspace. And let's go to a month. And let's go back and just find some summer trades. So this goes back to, let's go back to 2000. So we'll go to the SPY, go back to 2000, and let's see what summer did. So here is, let's go 2000. And then meanwhile, I mean, I do have some trades I'm watching to close. If we have prices today, 58.75, and watching this level closely for broken wing butterfly. I have a pin level at 5,900 and a pin level of 5,925. So let me set a couple of these levels and just do it at a glance. So 5,900 is right here. And 5,925. That way I can just check at a glance and see if I'm getting some closeouts today with a big payout. All right, so keep an eye on this one. And then this broken wing also has a trap from 58.80 down to 58.71. So let me box that in really quickly, and that way when we're just kind of spot checking, so the high around 80, low around 71, and drag this over there. So if price is going to close today in this box or around this line within about 5 points above or below, I've got some pretty good money to be made here. This one is 470 for profit. 470 for profit. This one is up to $5 for profit. with these are, but there's butterfly traps at the end of the day. So this one was an iron butterfly. This one's an iron butterfly. This one's a broke wing butterfly. And we'll see what happens. I mean, what I see gamma level wise and liquidity level wise, 5,900, 5,925. Those are the two big sticky ones today. Even with Nvidia, the market really didn't do much. We had, push up, faded, tested this is a 15 delta that we had a pretty strong support on today. So I'm just looking to see, does price, stay above this 15 delta for the day? If it does, I'm hoping we stick around this 5,900 for the next about 50 minutes. If we get a little bit of a rally, I'd hope we don't go too much higher than 5,925. So, all right, back to this chart here. Where to go? This guy. Let's go since 2000 on the monthly time frame. So let's go January 99, 99. Here's 2000. So obviously we get through the dot-com crash. January, February, March, April, May. Sell in May. What happens? Put a vertical line right there. So this would be May of 2000. If you sell at the end of May, do you do okay? Sell in May, go away. Well, you just saved yourself some trouble. So this was up around 7.6%, and all of a sudden it was down through November, even December. The market was down about 8% from that level. But it gets worse because 2001, roll into a new year, you have that big, and this is when most of the corrections have been happening in recent history. Your February, March has been some of the ugliest corrections in the market. Is we have the market trying to finish on a high note for the end of the year into December, January, and then usually February to March or February to April is usually like our pause or pullback, or when there's some calamity and chaos that ensues. That happened this year, and it happened during COVID in 2020. Okay, what's our sell in May, go away? Sell in May here, so end of May. Sell in May, go away. You're done you're buying back in November. So you start in November. You saved yourself about 14.5% in 2001 during a bit of a crisis. That's not bad. But then price goes sideways and then proceeds to go lower in 02. Sell in May, go away in 02. So you're down a little bit. Sell in May, gets really nasty there in the summer. Come back in November, you're actually up. So you avoided 14% drawdown in 2002. You avoided is that right? No, I'm sorry. You avoided about a 14% drawdown in 01, about a 17% drawdown in 02. Not bad to avoid those. And then the rest, I mean, this is the type of year that you're missing out, right? You sell in May, market's up and still up. This is October, this is November. You missed out on some gains there. So that'd be, you're missing out about 8 to 9% recoveries. And I mean, we probably know this, right? If you miss out on the worst days in the market, you're typically also missing out on the best days of the market. Usually the best days in the market, like percentage-wise, swing-wise, is shortly after the worst days in the market. This year is as a poster child for that history lesson, because we had one of the worst days, April, that weekend of like April 4th through the 7th, or I'm trying to think what the calendar was this year. This year in April, 7th was a Monday. So Liberation Day was the 2nd, right? Afternoon on the 2nd. And then from Wednesday, Thursday, Friday to Monday, it was just crap, like just pure bear market. And then after the 9th is when the pause went into effect. And so, I mean, the 7th was one of the nastiest days we've seen in a while, and the 9th was one of the biggest wins we've seen in a while. I mean, I individually had a $255,000 swing on the 9th of April. So had I bailed out and not participated, have I not been trading through even the downturn, I wouldn't have had nearly the profit to get me back into highs for the year. So anyway, just an interesting phenomenon in the market, where I don't know if it's true to necessarily sell and may go away. I really don't. I think that what I typically see is, if the market is eager to go somewhere, we have pre-summer pushes, which means that the momentum that is created in April and May oftentimes will stick around through even June, July, and then maybe top out in August or September. In the currency markets, it's very seasonal with things like that. You see some big pivots, but usually when you get some traction in like March and April, you'll see that same trend stick around through like a drifty summer. It'll drift in June, drift in July. You don't really get any tops or bottoms forming until August or September. And if you're trying to be like a counter trend trader, it can be excruciating. So same thing. I'm just thinking about that right now in the S&P. Um, we are watching this thing after this U.S.-China trade gap to the upside. Markets haven't gone anywhere. We haven't broken highs. We haven't broken any lows. This was our, European Union 50% tariff plus Apple. Still like responded positively off of that a little bit after a day. We had negative GDP today, but we still had Nvidia print positive and beat earnings. It just doesn't matter. Look, the market's going to go up, down, sideways, right? Are we entering a phase where not much is going to happen? Are we entering a phase where things start to roll over a little bit? The couple really ways to play this like quickly and pretty easily would be I'll do let me go simple moving average. So we're just going to do a simple moving average, and I just want to see the 200 because otherwise this gets super messy. I already have it on there. Look at that. So this is my 50 and 200. Okay, so 50 and 200, nice and colorful. Now I'm going to put on a exponential moving average. And the exponential, let's make this one also a 200. Okay, so I want you to pay attention to these lines here. So this line and this line are 200 moving averages. So if we continue to use the 50 moving average as support right now, this might be really choppy. Excuse me, but also provide intermediate support. I think a good trade, if it's offered, would be that price finds a bit of a dip between the 50 and the 200. And if we get a chance to see it go down to the 200 and then back above the 200, that to me would be a confirmation to then, position for some stop losses below, go after these intermediate highs again, and then of course go after all-time highs and maybe some momentum up. Could this market pull back more? Yeah, of course. We come back down to the 200. Doesn't mean I automatically want to buy there. What I'll probably do is be selling options. I'll be selling options down here. Okay, putting in some capital, 1-1-1 trades, maybe some at the money hedges, where I do a bear put spread trap here, and I sell a naked put down here. So as long as I can finance that put, or finance my debit spread with a put. So let's say that this is a $5 profit trap, and down here I can get let's say $7 of credit for a naked put. Well, I net $2 on the trade. I have a high probability of profit unless price is going to come back and revisit April lows. And if price is down here in the choppy zone, I can make $5 here and keep my net $2 on the trade, which makes me a total of $700. And I can space that out over, maybe the next 3, 4, 5 months. Do that on. I've got the accounts. I probably have 5 accounts I can do this on. So if I make $700, maybe 4 more times by the end of the year, that's $2,800 on 5 accounts. I'll just round this up to 3K. That's $15,000 without ever buying anything. It's just trading options. It's just some ways to generate some income. So anyway, I'd like to see that trade. In fact, I wouldn't mind doing it now, but I just think if we have a pullback, I'm going to see a jump in volatility, and that's what I'm trying to take advantage of. Right? The VIX has been pretty boring. And so if we're trading here at like a 9, I say that what's funny, it's like a 19 VIX was historically like, oh man, VIX is kind of high. It's kind of not. Considering where we just came from with up into the, we got up here into the high 20s in March when the Mag 7 was rotating, and then we faded on that 2-week pullback, and then we had, of course, Liberation Day and all the tariff drama, trade war drama. We went from 17 to 60. But I just think right now it's like, are we going to be elevated between about 17 to 30? If we come back up to like, let's say 30 again, if we get a VIX back up into the 30s, I'll probably sell some premium and see if it just chops around here. So if we come up to 30, I'm gonna look for some premium selling. But if it's right here at 19, it's like I'm not that excited. I don't know if we're gonna go too much lower. I think 30 could happen. I think a spike up to 30 could happen. But then we're looking at these type of levels, which we've had these pop ups to like 30 plus, and then they fade. That makes sense. So anyway, I would just like to see Price, give me something I can, participate in. So this dip would be nice. This is a 200 moving average right here, right? So this is a 200 moving average right here, 200 moving average right here. Breaking news, U.S. Appeals Court reinstates tariffs. So did they just completely go back on what they said yesterday? What was yesterday? So what was the court deal yesterday? Federal court struck down President Trump's reciprocal tariffs. The Wednesday night ruling concluded that the president exceeded any authority granted by the International Emergency Powers Act. So you're telling me that right now they went back and said tariffs are fine? Like, is this truly breaking news? So let me go into Discord. Here's my channel. Here's my news feed. What do we have? Germany eyes 10% digital tax on tech giants. Okay. U.S. Appeals Court reinstates Trump tariffs during appeal. Appeals Court temporarily halts ruling against Trump tariffs. Oh my God. Okay, so you're right. Breaking news. That's so stupid. Weird. U.S. money market funds assets fall 6.95 trillion. So they really, I just talked about this morning in a screenshot. This was during one of my morning sessions. Go over here. There. $7.2 trillion in money market funds. This was literally a screenshot from last week. This week, May 26th. That was Monday, right? Yeah, from Monday. So I pulled a screenshot Monday, and now I'm reading money market funds assets fall 6.95. That's over 300 billion exiting money market funds. Where are they going? I don't know. Maybe back into the markets. Maybe it's just cash. But yeah, crazy stuff. So I don't know. Did the market react on that at all? Not really. So are we going to stay around this like 5,900 handles today, 5,925? That's what I'm watching. I've got some good profit potential here. Pinning price, broken wing pinning price. I will take my SPX trade here, which is trading around 87% of profit. Let me go SPX. I think I put in a 5 debit, but maybe I deleted it. I think I was going to let this one. I would let this one go to full expiration. So we'll see. All right, I'm going to see how this cash settles in 38 minutes. So if we're anywhere here, this is what's kind of nice. If I go 59.25, it's a $470 winner. If it's at 59.26, 27, 28, or 29, I'm getting 370, 270, 170, an extra 70. If it's down here, 5924, 370, 270, 170, 70. So I've got some room there. 5,900, 5,901, 2, 3, 4, and 5. 5,900, 58.99, 98, 97, 96, 95. Right? So those windows, by the time we settle in today, 4 o'clock when the market closes, are we, in this area? And if so, there's some cash settle profits there. This is my broken wing butterfly, same thing. It's about a $10 trap. So I've got a $10 trap here, $10 trap here, $10 trap here. Obviously, price can slip in between my fingers and be somewhere in the middle, and I'll miss out on those gains. But if it's somehow close to those levels, that'd be pretty sweet. So here's hoping. All right. There's our seasonality stuff. Okay, so let's go back to this chart. I'm not like holding my breath for a pullback, even though the market has been sideways now this is going on 3 weeks of trading inside of that U.S.-China trade gap announcement candle. But if we go higher, it's not going to surprise anyone to melt up. I will say this though, if we go higher, I feel like this is going to bait people on the sidelines from jumping back into all-time highs. And I mean, again, I'll be selfish, but I'm hoping we have a pullback. I'm hoping that people get in. It's terrible timing. The market pulls back. We have another 5-10% correction. I mean, there's all sorts of ways this can play out, right? I mean, this market can go sideways and stay sideways. This market can pull back and find some dips around the 200 moving averages. And then if we go to them and then back above them, that's a good indication to buy again. That's a dip that I'd like to participate in, right? If we go higher, 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 all I'm going to really enjoy is the melt up. I've got some option trades. I'll let some of my naked puts go towards expiration or as close to them as possible. Grab 99%, 90+% of the max credit. If we get back to all time highs, I'm just less excited about buying stuff. I mean, because I look at it this way: if this is a high and the market tests the high again, I'd almost like to see this become a bullish pattern, right? Like, give me a pullback into this area. Give me a pullback into this area. Match that on the right hand side. Let's get like a 575 to 550 pullback, and then have this thing actually accumulate some additional shares. Some additional buying power. But time will tell. But I think that the hard part about right now is it just feels like not enough people are participating. I'm certainly super excited about all time highs without having a dip. Like, I will be more annoyed and perturbed. Like, I can't believe we hit all time highs without having anything other than this pullback. Like, this was your rip, this was your pullback, and that was it. That was it. Like, literally this break, and this thing has been melt up city the whole time. You know, I mean, it's like you had really one chance to participate, and that would have been there above a gap after the market already went up $100 a share. This is the only time to participate, and this was not a trend line break. You think about like big money and big confirmations. This market broke the trend line here at the early parts of May. This was end of April, early May. That was your break of the trend line. This was, you had to have the courage to buy this thing. And don't tell me that everyone was like, well, I bought it when Donald Trump said to buy on April 9th. Like, that's the dumbest way to take a buy signal. It was in the middle of all this calamity and chaos, and nobody knew it was going to happen. And we've never seen the market really manipulated the way that was on April 9th. That was pretty crazy, right? Anyway, point is, there was no real confirmation to be a bull. It was the courage to be a bull. And the retail crowd did it. The retail crowd was buying dips. And that was also seen as like a potential issue, is like the only people buying this market is retail. Yeah, well, the retail crowd's not stupid. I mean, everyone says this dumb money, but like we've been playing the game long enough where, if the market's down 20%, buy the dip. If 20% becomes 30, 40, 50%, buy the dip. Just don't go all in, or I guess do go all in. I don't know. So anyway, that's what I'm saying. Like, I'm more annoyed with this market if it goes back up to all-time highs, because you had about one good opportunity in here with confirmation. Other than that, it's just been melt up. Because otherwise, it's forcing you to basically buy like the scariest time in the market, which is the VIX at 60, and you're getting a previous level of resistance to become support, and that's about as good as it got, right? So anyway, we'll see. I do hope there's a little bit more sideways, a little bit more pullback. Nothing about this would make me nervous. If we pull back to the 50-day moving average, we pull back to the 200 exponential or the 200 simple. I mean, to me, this is, if it falls down and finds support, okay. If it falls down, finds support, okay. If it pulls back deeper, I mean, I'd look at this low to maybe a higher low and form a wedge, right? Maybe this market is going to give us a wedge. So I still think the market is trying its best to get to all-time highs, trying to work its way to all-time highs, but we don't know, you know? All right. So that's S&P. I wonder how much Trump paid for that. I don't know, man. I don't know. Honestly, it's probably like, look, man, if you guys don't give him this, like if you don't give this to him, like he's going to double down and it's going to get a lot worse. And it's like, they're probably like, okay, we'll just go back. We'll just take it back. Who knows? The Nasdaq, sure. We'll take a look at Nasdaq. Here's NDX. I'm looking at the indexes very similar, right? So I mean, here's my 200 moving average. This is the simple moving average in green and blue. So this like colored one, and then I'll point these out. This is my 200 simple and 200 exponential right there. Okay. So what I would like to see would be, can price, now that we have and this is the daily Nasdaq. I mean, this is a 50 period. Okay. I'd like to know if the 50 period is, maybe going to find some near-term support. Maybe this block is a really good support level on the Nasdaq. And if it is, then we just come back and we kind of test this gap again, maybe even fill this gap again. But it's still a good buying opportunity. This is like the shallow pullback zone, but we pull back and I'd still be positioning for some dips in here. I do the same thing. I put on a little profit trap with a debit spread, and I put on a cash secured put with the Qs because I wouldn't mind owning shares of the Nasdaq. If we breached April lows around $400, I would own the Nasdaq at $400. And I would use a collar trade and I protect my downside, but I would own it or turn it into an income trade. I just want to see a volatility go up a little bit. Does that make sense? So this is why I'm saying, like, the annoying trade right now is just more up, more up, more up, and we're back up to all-time highs, and we haven't had any chance to really participate in a dip. You look at the trend line break here. It's the same thing. Draw your trend. Where do you participate in this? The left side of the trend line is hard to call the bottom here, right? You get confirmation here. I mean, you buy the breakout. Normally, don't we have this? We break the trend line, we retest the backside of the trend line, and then we go higher. None of that happened, right? We had a trend line break that just continued to go up. There's your trend line break. So what did price do? It went up and it paused, went up and it paused, went up and it paused. That's all we've been doing is flags. And on an index, that can be really, really frustrating. So that's the Nasdaq. The Dow is still sitting at the 200 moving average. So I guess for this one, I mean, does it cluster around in here? Maybe. Maybe it's going to dance around between the 200 and the 50 and just kind of bounce around before we get another leg higher, right? Again, we could have pullbacks here. I'd still participate in the Dow to the upside. I have some naked puts on the Dow that are doing pretty well. I'm up about 80% of that max credit right now, and I'm going to hold it a little bit longer. So here is the Dow here. Naked put, it's up about 90%. That's not bad. End of the month tomorrow. I might sit on this one over the weekend. I'm up about 89%. I mean, this isn't too bad. I'm only sacrificing about $40 on this trade, 35 to $40. This one, 111. Max profit's 203. I'm up 83%. This one, max profit, 203. I'm up 170, 170. So this naked put, I might close and grab most of this profit over the weekend. Let's see. Do I take it now? 360 on the Dow. We'd have to come back in the next. I mean, it's likely going to be full profit. I don't think we're dropping here in like 20 days. We'd have to drop 14.5% in order for that trade to be threatened. So it's high probability. To me, is it worth the extra 40, 50 bucks? Well, yeah, of course. But do I need to have the risk if price goes down aggressively in the next 32 days? Not necessarily. I just don't think it's going to get hit. So if I go to June 30th, 360, there's about a 3% chance that trade gets under any really stress. So 97% chance it finishes out of the money, which is all I need. Or I can just take the profit now and move on. So I'll probably look at this one over the weekend. If we kind of hang out here for Friday, don't have the month end on a terrible note. We don't really have any pressing news tomorrow, I don't think. We have core PCE. I guess that's a big deal. Have some inflation data tomorrow. So anyway, that's Dow. Russell, you look at your moving averages. Here's your 200 moving average. That's exponential. Here's your 200 moving average. That's your simple. What are we doing? Well, it looks like we're dancing in between. Here's the 50 simple and the 200 simple. So we're just bouncing around in here. That would make some sense. We have some consolidation. Are we possibly in a small recession? No, because it has to be 2 negative GDPs. And honestly, this whole recession talk, look, no. Initial jobless claims. Watch. If you go to initial jobless claims, is this trending higher? If you want to feel the real effects of a recession in the U.S., this has to start going up, right? Look at our recessions. COVID was a bit of an anomaly, right? Everything went nuts and nobody knew what the hell was going on. So that's a bit of an outlier. Go back here. The last time we had a really strong trend in unemployment, the last time we had a real recession would have been '08. Okay, well, yeah, you can see that from '07 to '08, it's clearly trending higher. And by the time, and here's another thing, look at your unemployment rate. Unemployment rate. Okay, and where are we at? Historically, we're pretty low. Last time this really started to trickle higher was 2007, 2008. So, unless this is going to go dramatically higher, so unemployment rate, initial jobless claims, continued jobless claims, unless these are trending higher, okay, and I mean, like, this probably has to be closer to 5% for us to really start looking at the U.S. labor market and thinking, I think there might be a problem. And the sad part is maybe the prices are going to reflect it early. Maybe it's priced in. Maybe things start to, like, the market sniffs it out a little bit. Markets are typically forward thinking, so if they start to get a little concerned that the labor numbers are coming in softer, then the market might reflect that. But I don't think one negative GDP print after having basically a blasted systemic trade war that's been resolved in a way, or at least paused. Um, I don't think that puts us into a recession. So I could see that the U.S. growth is slowing because we do have higher yields. We have 25, 26 times earnings on the S&P, and that's historically pretty high. And when we have high price to earnings, then we typically see lackluster returns. So I could see us struggling to really hit 10, 15% a year in the S&P. I think more realistic is going to be like 4 to 8%. You know, but if the market can just kind of hum along, okay. But the big question is, are we about to see more fiscal spending? I mean, Trump and administration talk like we're going through this austerity practice, but we're not. We're increasing money supply. We're still increasing the debt ceiling or raising the debt ceiling. That's just a funny number anyway, and we're still adding to the deficit. I mean, this big beautiful bill is adding, like, I think $4 trillion to the deficit over a 10-year window. That's a big deal. Even, I mean, if we want to pass a tax cut, it's adding to the deficit, right? We want to do a trade war. It's going to add to the deficit, probably add to inflation. But markets are not sniffing this stuff out. Like, it's not priced in right now. That's what March and April was about, is maybe the uncertainty of how bad it could be, but it's clearly pivoted hard, right? CPI, PPI prints have been fairly soft. Here's a good way to think about it if you want to look at real-time inflation rather than waiting for every month's. Let's go true inflation, trueflation. Okay, like I could see this being a little bit of a concern because when this was peaked and started to trend lower, we were noticing that inflation data was coming down too. Right here, I'll show you a comparison. Let me bring up the Edge Finder tool. Let's go to inflation data, and we'll go to the CPI news. Okay, so let's look at this kind of like point. Let's look at a couple line items here. Let's go to inflation and CPI year over year. Okay, so here is kind of a camera one, camera two. Let's go back to this is December. Okay, and this is real time. So like December to January, we were up around 3% trueflation. Okay, let's go to December of 2024. December 2024 CPI was sitting here around 3.2, 3.1%. Right? So we ended up, going sideways, kind of up to 3.4, which was a concern, going up again, 3.1, 3.2, 3.5. And then this would have been, let's see when this thing started to dip lower. By the time we rolled into January into February, this real-time inflation metric, January to February, big drop in inflation. January, February into March, huge drop off in inflation. When did this trend lower? Okay, here's April, May, June, July. So as this was trending lower here, the lagging data of the US CPI prints that happen once a month they're lagging behind, but they started to show the same trend. They trended from 3.5 all the way down to 2.4. Okay, and then what happened? Well, we started to bottom out, kind of rally up a little bit, and then rally up again. And then we saw this. Actually, you know what? I'm sorry. I did that. I went too far back. This would have been back further in here. When this was trending lower in 2024. This is December 2024, which is on my Edge Finder here. My fault. So we were up to about 2.9 in December, January, and then trending lower. So there's your 2.9 down to 2.3. So this would be the equivalent of about 2.9% CPI. That'd be your headline CPI, all the way down to about the current reading, which is about 2.3. Okay. So even though this went from 3% down to 1.5%, our CPI prints, which obviously has all of its categories, you've got CPI, you've got core CPI, you've got super core CPI, and that just excludes all the things that actually have inflation, like food and energy and health and housing and shelter, right? But this thing went down based on the trend. So now that we're up a little bit higher, is it possible that we start to register like a 2.4 or a 2.5, and we go up a little bit? Maybe, right? Is it just? I'm just curious, like how the data reads. So when we go into June CPI, if this in real time has gone up a little bit, maybe this prints 2.4, 2.5, which again is probably the problem for the Fed. They look at something like this and it's like, well, heck, we're talking 2% target, which is your target inflation rate, and all of a sudden we print 2.4, 2.5. We're just not getting to that silly little target. That makes sense? So I don't know what that means. Like, does the Fed have to pause still? And one thing, because we had FOMC minutes on Wednesday coming into the end of the month, I mean, I don't think much has changed here. So if we go to probabilities, this shifted down a little bit. This was like 97 and 77 this week, and now it's 94 and 74. We're still looking at our first cut coming in September and October. So either a cut in September and a cut in December, and these are always subject to change, right? So anyway, nothing has really changed from the probability of the Fed right now. If inflation does go a little bit higher and we start to see a 2.4, 2.5, 2.6 trend in CPI, I wonder if the target inflation rate is just going to have to change. We've been saying 2% for years and we're not getting there. And we're nowhere there. I mean, this current environment, I don't think warrants a 2% inflation target. I really don't. So I mean, I think if the Fed were to raise from 2 to 3%, it would probably make life a lot easier, because then they can say with data, like, look, our target inflation rate has really been 3%. If they can say that, then you could say, look, the Fed has actually done a good job. It's inside of our levels, right? It's been operating inside that 2 to 3% range. But to say 2% and spend literally 3-4 years above it, that looks like crap. I mean, you're not an accomplished, credible Fed if you can't hit your targets. Are you just saying a number to say a number? So I think the real economy is more like we have higher inflation. I just think we need to acknowledge it, and the markets can adjust to it. But to be like, well, look, really, real inflation is 4 or 5. It's like maybe it is, maybe it isn't. But just the difference in this would allow the Fed's policy to have a little bit more flexibility than just trying to do nothing and hope that prices just magically go lower, because they won't. Right? I mean, if we have a tax cut, we're not going to see inflation go down. A tax cut means more people have more money and they'll spend more money. That's going to be more money chasing too few goods. So there's inflation, right? I mean, I don't know what it's going to take to get back down to 2%. I mean, it's going to have to be, I don't know. I really don't know. It just seems like we've got the wrong policy for years, and the Fed's always reactive. We know that. It's always lagging. We know that. But, based on this, we have been trending off the lows from 1.3 to 2%. So that's a 0.7% swing. I could see the CPI readings in June going a little bit higher, but again, is it problematic? I don't know. Not necessarily, right? Is it problematic? I mean, if we're not going above 3% and we're still trying to target 2%, I think as long as this is our current environment, okay, I don't think the markets really break on anything. If we're up here again and we're revisiting 2022 levels after that little big correction, then we had some pops to the upside and inflation was sticky for about a year, that's going to be more problematic, because we've gone from near 2% to now maybe we're back up to 3.5%, 4%. That would be a problem. Okay. So anyway, we will see. But the Fed isn't changing anything right now. There's also an argument being made that they may not do anything this year. They may not cut at all. I think that's also going to be inflation discussion, like, are we seeing higher inflation? Are we going to have to adjust their target inflation rate? This 90-day pause is up in July, so that allows maybe the market to do something that might get the prices excited. Maybe that allows Trump to talk more, which he will for the next 60 days. But I just think I'm going to keep it pretty simple, right? If we have dips and pullbacks, I'm interested in buying and creating option trades that'll help me generate income. Position wise, I mean, when I look back at these levels here, where to go? If I just look at my SPY, I mean, I could be really simple here. If I just buy like a 575, let me put this here. If I buy a 575 and I buy a 555 and I buy a 500, if that's all I did, I think I'd be okay, right? If I had a pending order here and I buy a chunk, let's say I put, $1,000 at it, and then I buy a chunk here for $1,000 and I buy a chunk here for $1,000, my break even is going to be somewhere around this level. I'll put a thicker line. My break even is going to be somewhere in here. Okay. If that break even gets up to the all-time highs again, that's if we have pullbacks. I mean, I'd still make 13% of my money. Okay. So I make a few bucks. But I also can take a lot more income out of this if we're dropping a little bit, and I can sell options down here and make, $500 or $700. And then it drops a little bit further and I can sell more options here and I can make another $500 or $700. Like, I'll make more income that way and just kind of wait this thing out for like 60 to 90-day trades. Right? So anyway, I think the pain trade, I keep going back to this, the pain trade is a melt up. The hardest thing right now as an investor is to think about this pullback, but here's what I'm not doing. I'm not actively bearish at all. The only time I was bearish was right in here. We took it in a final hour session. I did a 590 by 580 bear put spread. I made about $180 in that trade. So it could have paid me about $650. I ended up closing it early for 180, which I'm glad I did because right now it'd be worthless. I paid like $370 for it, and by tomorrow's expiration, it would be actually down about $2. So I did take the profit on that trade. That's it. My other hedges are out until August, September, October, and December. Those are my hedges. They've already been put in. They're already 1/4%. It's not a big risk. If the market goes up, I'll have higher highs in my portfolio. If the market goes down, I will try to look at managing some of those hedge profits if they pay. But I think the pain trade is it's going to make you feel like you're not doing enough to participate. And that to me would be the most frustrating trade is we get to all-time highs and like I'm annoyed. I should be happy we're at all-time highs, and in a way like I will be because obviously it's a lot better than being down here at a 20% bottom. But it's like, what do I do from here? Do I just keep buying the market? It's like I don't think so. I don't want to, I mean, I just think that this would be like a perfect bull and bear trap environment, because it's not like monetary policy is getting loose. It's not like the Fed is being super accommodative. I could see this market setting up for another kind of wild and crazy roller coaster. Couldn't you see that? Right? This market, establishes a bit of a low, establishes some highs right here, and anybody that gets uber excited about the upside is going to be met with a bull trap. And if you're panicking at the downside, you're met with a bear trap. And traders can make money in here, but if you're long-term holding, you're going to see this market return nothing in maybe a year or two, which is understandable. But there's obviously like swings, right? There's swings in the market. So that's what I'm like very curious on to see how this whole thing plays out. Are we going into like a big wedge environment? We're going down to test the highs and then fall. Are we going to test lows again? Maybe, I don't know. But we'll see if there's a global asset bubble. If there's a global asset bubble, then I'm not calling the top. But I also look at this as like, is this our trend line? That seems a little ridiculous to be like, yep, there's our trend line. If it breaks the trend line, we can sell it. I mean, this isn't even a V bottom. Like this is an I. Like it just goes straight down, straight up. But I mean, I guess it technically was a V bottom. We had this low here. It did pop up. There was a channel. There was a little neckline to break, and it pulled back again. So it did break this. That is a cup and handle break. That's pretty textbook. I was measuring that cup and handle up to around 611, 610. So that could be what this market is determined to find. And because we spent time now, this is going to be 3 weeks. If we're spending 3 weeks above these moving averages, the probability is, even if we hit the moving averages, these are going to offer support as opposed to a chance for the bears to take back control. I don't think the bears taking back control is really a sell. I think the bears taking back control for the short term is, be patient, but I'm looking at dip opportunities to then, weather the storm and then see if we get back to highs for the remainder of the year. So I still like buying dips. But what I'll probably do is really just trade a lot of options. One of my favorite trades is it's a 1-1-1, which is I do a bear put spread for a profit trap, and I finance that with a cash secured put. So in a way, it's kind of like a modified ratio spread, but that allows me to set a trade where it's like, you know what, if I think I'm going to take a little profit trap in here and then sell a put down here, okay, I do that. I do it with trades where I believe, look, I'm going to own the underlying. I don't mind owning the underlying, right? So if price is anywhere in here by expiration, I can keep my profit trap and I can also keep my credit on the naked put. That's a pretty good trade. Okay. If I wanted to make more money in this trade, then I use the profit trap and I move it way lower, and then I make more credit on the trade. But I like also having this bigger window where if price is like kind of range bound, it allows me to maybe capitalize on both. I usually do this in about like a 40 to 60 day trade, sometimes 80, but usually 40 to 60 days. But that's a good trade, especially if you got the cash for it. Okay, we got 10 minutes left before the close. I do have to jump into another class here at the top of the hour. I'm waiting to see how these prices settle in. Okay, so I've got the trap price here at 59.25, trap price here at 5,900. This broken wing is looking good for full profit in the next 9 minutes. If you're in my daily profit play, it wasn't fun. We had to ride this thing out all day, but it's still a profit nonetheless. So here is the final look to it. It is up. Is this showing bonus? Hang on a second. Oh, I'm getting a bonus trap in this thing somehow. I'm going to try to get this thing out for like 10 cents credit. 10 cents credit not filling. Maybe 5 cents credit. Only if it fills it a trap. Otherwise, I'll let it cash settle for the full 80 cents. Okay. I mean, it looks fine. We're trading at it's like a 2 delta right now with the next 9 minutes to go. I don't think we're going to drop 40 points in 9 minutes. But I'm asking for a 5-cent profit trap if it'll give it to me. Maybe it does, maybe it doesn't. But if not, I'll just take the 80 cents at the end of the day. Okay, the rest of this will be cash settled in 8 minutes. So I'll mark this on the chart. If we're at 5921 to 5929, that's going to be a profit trap for me. So anything in that window, I'll make an extra, for every $1. My pin price is 59.25. So every $1 is a $100 bonus. And then this one will be a bonus trap from 58.96 to 59.04. That'd be my trap. So if we cash settle in between either of these levels, I've got a bonus trap. So if it pins exactly at 5925 or pins exactly at 5900, that's a perfect little $5 winner, which is $500. But if it is in between, if it's $1 off, I still make $400. If it's $2 off, maybe $300. So let's see what price does for the next 7 minutes. I'd love to see this thing just stick hard at 5,900, stick hard at 59.25. Just don't tease me, right? Like don't go to 58.95 because then I'll lose like $20 here, $20 here. I'll still make on the broken wing butterfly, but I want to see if this will stick right at a price in this range. All right, so we'll keep an eye on that one for the next 7 minutes. Any other thoughts, questions? for today. I mean, we spent a lot of time just reviewing like what could this market be doing. Trying to keep it really simple, really clean, good technicals. Trying to be patient. That's honestly the hardest part right now. Is just I'm a little aggravated that this thing wants to just like it's trying. Like, are we pushing higher? Are we pushing? Like, we're not. We're not going anywhere right now. We've had if we close on this weekly candle, if we close on this weekly candle exactly where we are today, going into Friday. I mean, it is the end of the month, but I mean, if we close right in here again, there's nothing exciting about this market the last couple of weeks. Like nothing at all, right? So this is kind of where we're at. And it's not going to stay here forever, but how many days? I mean, this is one thing I could look at for my. I've got a pinch point scanner here. I'm going to go SPY and look at the SPY. Do I have anything that gives me? Are we in a squeeze on the SPY? So we're not in a pinch yet, which means I'm just looking for some coiling, right? If price is consolidating, price is coiling, then I think the SPY is ready to make a move. It's just not there yet. So what starts out is just a couple of weeks might have to stretch into maybe a month. If we consolidate for a month, then absolutely, we're looking to time this thing to get a move come like maybe like late July, August, September. We should have a pretty big move coming in the S&P. SPY, same thing, or Qs, I meant same thing. QQQ right here. So again, no pinch, no coiling, and I just want to see if it consolidates longer. Can I get this thing to align with my filters? I'm looking for this to be a get. Oops, change the color here. If this becomes a get set or becomes a go filter on the SPY, on the Qs, on any Mag 7 stocks, I mean, those become really, really good trades. Okay. All right. What do we have? 5 minutes? 5 minutes. Where are we going? I'd like to see some of these windows cooperate, please. That'd be fun. That'd be nice. Give me a little bonus trade on the day. So broken wing is full profit. I'm not going to close it. I'm just going to let this thing settle today for a full 80 cents. And then iron fly, watching. It's this one that I'm trying to get cash settled. We're trading at 59.07. I'm only risking $30 on the trade, but if it settles in at like 59.04, that's $100. 59.03, that's $200. So I'm just kind of hoping that works out. The 25 probably not going to fill. That'll be a max risk of $30 as well. Does a pinch point scanner cover all markets? Yep, it cover. I mean, you got 10,000. It's not covering all markets like forex and futures and stuff like that. It's going to be mostly stocks. I mean, if I typed in like euro dollar, right? But there's ETFs. If I typed in what's an ETF for the dollar? UUP, FXY here. So I've got the Japanese yen. I've got the dollar. I mean, if you're trading like currency related ETFs, you can also get those. Like, are they ready to move? Let's inspect the dollar. Is the dollar no stock selected? Obviously select this one. UUP. It's right there. Duh. All right. I mean, let me take a look at the dollar. Kind of. It's not as coiled as I'd like it to see. I'd like to see a little bit more consolidation. Maybe go FXY. That one's actually been moving quite a bit. Yeah, they're not coiled. There's a euro-based ETF as well. So anyway, but there's 10,000. It's ETFs. It's ETFs. It's stocks. You've got your single, double, triple leverage ETFs, inverse ETFs. You've even got penny stocks. I did a webinar today. We got penny stocks in this thing too. Not my favorite. I don't like to trade penny stocks, but for everyone that's interested, we got something for everybody. So 10,000 plus stocks, actionable watch list items. I mean, today I did a watch list. I posted this in my Telegram right here. I actually gave my watch list right here. So these are tickers that I'm watching. These are actionable. And, the pinch point scanner also gives a direction. So if you want to trade with a directional bias, you can, one click, it gives you a trade idea based on fundamentals and technicals. So it's pretty cool. Metals. I mean, give me a ticker. I mean, GLD. GLD. Not sure why this is. You can find it in here. SLV. And I know there's a patch that had to come up today. Here we go. Yep. So there's something we'll get this patch. I mean, this is an easy fix. But yeah, I've got GLD, I've got SLV, PLTR. I think that was platinum. I looked at that one early this morning. Copper or HG. FCX is copper. That's a company that does copper and precious metals. That's FCX, Freeport McMoran, I believe. 5908. Come on, dude. I'm gonna miss this thing by another dollar. Like, come on. So stupid. 5910, final minute. Son of a biscuit. Well, naturally, right in between my freaking trades. Dadgummit. All right. Well, I made 80 bucks down here. That was a win on daily profit play. I lost 30, lost 30. So 160 bucks here, lose 30, lose 30. Net positive about 100 bucks on the day. Just for intraday 0DTs. That is annoying. But I've got some levels tomorrow. SPY, I've got a level tomorrow at 595. Got a level at 6,000. I've got a level tomorrow at 5,800. So I'll try it again tomorrow for some very small risk, high reward trades. I don't win a bunch of them, but when I do, I typically, I'm risking, usually 25 to 30 bucks, and I can make sometimes like $100 to $400 on these trades. So I don't have to win a lot of them, but it is annoying when it's like it was right there, right? The final 5 minutes, it was like, yeah, I was at a profit trap, but then I'm not. So anyway, yeah, pinch point is great. There's tons of stuff to work with, and this is what I'll say. And I'm gonna jump into the masterclass here in just a couple minutes. But I mean, my favorite ETFs, right? Find my ETF, give a little inspection, and look to see if we have a squeeze. So like I said, this will be patched. I don't know why it's not picking up the squeeze today, but here's what I'm looking for. Anything that I type in ticker wise, I'm looking for a get, set, or a go filter. This tells me that probably within the next 30 to 60 days, maybe sooner, whatever stock it is, whatever index, ETF, whatever it is, it's going to move. It could go up, it could go down, it could go both, but it's going to move. And that's where I trade. So everyone that's asked me, where do I find trades? How do I find trades? I used to have to do this the old-fashioned way, manually searching everything, manually finding my trades, sifting through IV ranks and sifting through, watch lists and scans. And now I just have it at my fingertips. So that's what this is all for. Okay, so SPY, QQQ, right here, your Mag 7, so you've got Tesla in here, everything, right? Like obviously you're going to have Apple, Microsoft, MicroStrategy is getting close, Palantir is getting close, right? Like if I find this setting up where it's like if I find my stock or ETF, I give it an inspection. If it's setting up for a get, set, or a go, I'm probably going to take a trade on it. Obviously, you can just do this. I'm searching here for my favorite tickers, but if I just went to get set, I just automatically have my filter, right? If I go to go, I automatically have my filter. So this is like stocks that are primed and ready, stocks that are primed and ready. That's what I'm looking at. Do you need to watch all the master classes or the same for the new? No. So today is going to be, we're going to review the scanner, the best practices, and then we'll talk about bearish strategies today. So yesterday we did bullish, today we're doing bearish, and then tomorrow we're going to do neutral. So there's something for everybody where each class is going to be different. So you can watch yesterday's recording. You can come in today. We'll talk bearish, and then tomorrow we'll do neutral. Cool. All right, sounds good. Okay, I'll let you go for today. Thanks for being here for the final hour. Sorry it wasn't live yesterday. I was just caught up in webinars and classes, but back at it today, and we'll do it again tomorrow. All right, thanks. Bye.